Every successful day trader, whether they think consciously about it or not, is profitable because they utilize three main concepts: compounding, multiple setups with positive expectancy, and good risk control. In this video, I'm going to explain the ways I day trade profitably by applying these concepts, as well as talk about how I utilize prop firms for leverage. I'll start by talking about the most important thing, which is giving your system the time to work. Then I'll move on to discuss an example strategy that has positive expectancy despite losing or breaking even most of the time. After that, I will talk about trading a portfolio of systems with different win rates to manage risk and improve overall expectancy. Lastly, I'll discuss how to use prop firms as leverage. The first and most important concept is compounding. Many beginner day traders fail because they want to get rich quickly. Successful traders, not just day traders, are profitable over time because they have a system with a positive expectancy. If you have positive expectancy, all you have to do is control your risk and then give your system time to work. Warren Buffett and Charlie Munger are two of the most well-known traders. What is less known is that they had a friend named Rick Guerin, who also traded with them using similar value investing principles. However, Rick eventually declared bankruptcy because he took on too much risk. The primary reason a trader puts on too much risk is because they are in a hurry. To succeed in this field, you must not only have positive expectancy, you also need to practice good risk control and give your system the time it needs to compound. I will talk more about positive expectancy and time horizon in the next slide, and then cover an example strategy that has good risk control. It takes years to significantly grow your account while controlling risk. While it's not difficult to double a $1,000 account in a short amount of time if you over-leverage, you will inevitably blow your account if you continue to trade that way over time. Good traders have a time horizon of years, and often decades. The best traders I know grow their account by an average of 15 to 20% per month. The actual gain is smaller, since they use part of their profits each month to pay for their expenses. If your plan is to eventually make a living off of your trading, you need to develop this mindset as early as possible. Most traders who switched from having a job to full-time trading did not change anything about their trading plan as part of their transition. They simply realized their system, on average, could cover their expenses from month to month, and decided to go full-time as a result. Because of this, you should not be trading with the idea of implementing a significant transition plan later on to go full-time. It is a losing strategy to try to make a lot of money very quickly, and then switch to a slower, more sustainable way of trading in the hopes of living off of it. The last point I want to mention on this slide is that you will spend most of your time in drawdown. It is unrealistic to expect your account to be at its all-time high every day. A trading system is successful if it has positive expectancy over the long run. Another way to think about this is, your profits and losses yesterday, today, and tomorrow are irrelevant. Focus on your trading system as a whole, and where you will end up going if you maintain your current behavior, not what you accomplish today. A strategy has positive expectancy if it is net positive over the long run. Here is an example of a simple strategy that has had positive expectancy this year, despite breaking even or losing most of the time. The strategy waits for the first bar of the day to close on the ES 2-minute chart, and then places limit orders to fade any breakout above or below the first bar's range. When one order gets filled, the other is canceled. The stop loss is 4 points. The take profit is 12.25 points. The extra tick is added to cover commissions. If the market moves 4 points toward the take profit, the stop loss is automatically moved to 1 tick beyond the entry price in order to exit break-even if the market reverses. Getting out for break-even is often referred to as a scratch, which is the term I use for the next few slides. I am only showing the past 4 months, because these are the months when I ran the strategy live using automation. Previously, I had only backtested the results. As you can see, most of the time the strategy hits the stop loss or scratches, but since each winning trade makes 3 times the risk, the strategy as a whole has positive expectancy, even if it is just netting around $1,000 per contract by the end of each month. On the next slide are the results in detail for each trading day. Here is a breakdown of this strategy's individual trade each day for the past 4 months. This strategy is a great example of why it's important to focus on your long-term trajectory over your short-term wins or losses. Many beginner traders place too much emphasis on their individual profits and losses each day, which can cause them to believe that a single day's trades are important. I'd like to reiterate what I wrote on the time horizon slide, which is that what you gained or lost today does not matter compared to where you are headed. A trader who posts wins frequently without good risk control is likely to lose their account, whereas a trader posting losses and break-evens on most of their days might still be making money over time if they control risk well. Here is the expectancy and profit factor for the strategy, assuming one ES contract is traded each time. The expectancy of a single strategy is the sum of the average win times the win percentage minus the average loss times the losing percentage. For this slide, I did not include scratches, which is why the percentages do not add up to 100. As you might expect, the expectancy and profit factor for such a basic strategy are low. I personally trade a modified version of this strategy that has higher expectancy, though I am not sharing it in this video. The point in sharing this example is to express the importance of the 3 concepts: positive expectancy, risk control, and the patience to let a winning system work over time. I am a member of many trading communities, and this basic strategy beats the majority of newer traders who post their gains and losses each day. It is not a requirement for a trader to have multiple strategies to make money over the long run, but many traders over the course of their career will learn a number of setups, identify which ones fit their personality, or can be included through automation, and then develop a portfolio of strategies that they trade together. Since the market often switches between trading ranges and trends, most traders have both trend and trading range setups. One of the benefits of trading multiple positive expectancy strategies is that you are able to better control your risk as long as those strategies have different win rates. It is not uncommon for me to take a loss on the bar 1 fade setup and be in a drawdown to start the day, then recover the loss on a trend continuation after a pullback to the moving average. Some days I actually win the bar 1 fade and then take a few losses trying to catch a trading range reversal or breakout before that trade goes my way. My point is, if all of your trading systems have positive expectancy and different win rates, they will work together to better control risk and increase the overall expectancy of your portfolio as a whole. While there will be days where all of your strategies lose and you hit your daily loss limit, those days are rare. Again, remember to focus on the overall trajectory rather than any individual day's wins or losses. Since prop firms are popular these days, I want to share the proper mindset for trading with them. Firstly, you will not be successful with a prop firm if you are not trading positive expectancy setups with good risk control. Secondly, you should rarely, if ever, increase your contract size with prop firms. Since prop firms offer you trading leverage at a cheap price, it makes more sense to buy another evaluation and turn it into another funded account rather than increasing your contract size. Most prop firms make money because the majority of their customers are impatient and trade too large of a size compared to the account's allowed drawdown. The only cure for trading patience that I know of is to log your trades and track your statistics so you can see your trajectory over time. Seeing your trajectory helps you gain confidence in letting your positive expectancy system work over the long run, which allows you to continue trading a small size as you increase your leverage by buying more accounts. As for which prop firms to use, I recommend focusing on those with the least payout restrictions, since prop firm money is only yours if you get paid. Right now that is Bullinox and Topstep, though this may change in the future. Note that if you want to trade multiple prop firms simultaneously, you will need to use a platform that allows multiple rhythmic connections, such as Quanthour. Trading is difficult because there is a lot to learn and piece together. First, you need to develop an intuitive grasp of technical analysis, which can take years of studying and watching live charts. Then you need to expand on that analysis with concepts that augment it, such as Wyckoff theory, open interest, gamma exposure, and more. Over the course of your trading journey, you will be exposed to many setups across many time frames and styles of trading. You will need to categorize and try them until you figure out which ones make sense with your personality. This is important, since a positive expectancy system doesn't work if you aren't able to execute it consistently because of psychological issues or bad risk control. You will likely lose money trying to figure out which setups work for you, so keep that in mind. The challenge is to identify as quickly as possible the trading style or styles you are suited for, so you can minimize the loss incurred from trying setups that do not turn out to be a good fit. Remember, it's important to categorize, track, and iterate upon each setup you try so you can improve your system over time. For me personally, I average between a 50 and 60% win rate, with a profit factor around 2.5. My first trade of the day is a modified version of the bar 1 range fade, which, as you know, loses more often than it wins. As a result, I'm accustomed to starting almost every other day with a drawdown after my first trade. I believe incorporating low win rate systems in order to improve my overall expectancy has helped me not only make more money, but also overcome psychological and emotional issues stemming from taking multiple losing trades in a row. If you are a beginner trader who seems to struggle with taking losses, consider thinking about your portfolio as a whole and mixing in a few low win rate strategies. I hope this video has helped you, or at least given you things to think about in your trading journey. Many longtime subscribers to my channel have often asked if I will ever set up a Discord community, and I regularly said no, because I did not think I had anything to offer that existing trading communities already provided. That has changed now because I have discovered many other ways of earning income that can be done alongside trading and a day job, and I want to share those skills to anyone willing to learn. The truth is, trading is just one form of income, and one of the best ways to overcome psychological issues with trading is to have other forms of making money so that you don't mind taking a losing trade or just watching the chart move without you. The community is called Compound Your Life, and as of the release of this video, it is not open to the public yet. Right now, I am only inviting people individually, with the intention of training them on the multiple other forms of income that I use. Eventually, the community will be open for anyone to join, and if you are watching this video after July 2024, then please check the video description and pinned comment for the link to join. Once again, thank you for watching this video, and I wish you the best of luck in all your financial endeavors.